G'day, future investors. Are you planning to buy your first rental property? If so, what are the things you should consider? It's a big step, isn't it? The world of real estate can be exciting, rewarding, but also a little daunting, especially if you're just starting out. But fear not. With the right knowledge and a solid strategy, you can navigate this journey with confidence. You see, buying a rental property isn't just about owning a piece of real estate. It's about making an informed investment that can provide you with a steady stream of income and potentially a lucrative return in the future. But how do you ensure you're making the right choices? Where do you start? What factors should you consider? In this video, we're going to discuss 3 crucial tips to consider when buying your first rental property. So, sit back, relax, and let's get you one step closer to becoming a savvy real estate investor. Tip number 1, buy a good deal. But what does that mean exactly? You may be wondering, especially if you're venturing into the world of property investment for the first time. Well, don't fret, we're here to break it down for you. A good deal isn't just about finding a property with a low price tag, it's about recognizing the potential in a property even if it's not immediately apparent. Consider this, you find a property that's priced a bit higher than you'd like. But upon inspection, you realize that it has a basement that could be converted into a separate unit or a spacious backyard that could accommodate a granny flat. Suddenly, that slightly expensive property isn't looking too shabby, right? That's what we call a value-add opportunity. It's about seeing the diamond in the rough and knowing how to polish it to perfection. But how do you secure such a deal? That's where negotiation comes into play. Negotiation is not about trickery or manipulation. It's about presenting a win-win situation for both parties. For instance, you could negotiate a lower price by offering to close the deal quickly or by waiving certain contingencies. Just remember, every negotiation is unique, so be prepared to adapt your strategy based on the seller's needs and the property's specifics. As a first-time investor, buying a good deal is crucial. It can mean the difference between a profitable investment and a financial sinkhole. It's not about rushing into a purchase, but taking the time to research, analyze, and negotiate. It's about seeing beyond the present and envisioning what could be. So before you sign on the dotted line, ask yourself, is this property priced fairly? Does it offer any value-add opportunities? Can I negotiate a better deal? If the answer to all these questions is yes, then congratulations, you've found yourself a good deal. Remember, the key to buying a good deal is negotiation and finding a property with potential for value-add opportunity. It's not just about the here and now, but the future potential that lies within. So don't be afraid to dig a little deeper and discover the hidden gems that others may have overlooked. Happy investing. Moving on to tip number 2, the location of your rental property is paramount. In the world of real estate, you've probably heard the saying, location, location, location. It's not just a catchy phrase, it's a fundamental truth. The place where your property resides can significantly influence its value and potential for returns. Let's take a moment to think about what makes a location good for a rental property. First, it should have a strong potential for price appreciation. This means the property's value should have the potential to increase over time. Locations with strong economic growth, expanding populations, and improving infrastructure typically offer this potential. Think of areas where new businesses are setting up shop, where schools are performing well, where local amenities are being developed. These are all signs of a location with high appreciation potential. But appreciation potential is just one side of the coin. The other side is the potential for good rent numbers. A location with high demand for rental properties can allow you to charge higher rents. This can improve your return on investment and help cover your mortgage payments, maintenance costs, and other expenses. So, how do you identify areas with strong rental demand? Look for locations with a high population of renters. This could be due to factors like a large student population, a robust job market attracting young professionals, or a lack of affordable housing for purchase. Also, consider the convenience of the location. Properties near public transportation, shopping centres, and other amenities tend to attract more renters. The same goes for areas with good schools, as these are often sought after by families. Remember, the location of your property can significantly impact its profitability. A good location can attract high-quality tenants, command higher rents, and offer strong appreciation potential. However, it's also important to balance these factors with your budget and investment goals. A prime location may command a higher purchase price, which could impact your initial return on investment. To sum up, a good location is one with high appreciation potential and good rent numbers. Our third and final tip is to consider landlord-friendly estates. But why is this important? Well, let's dive in and find out. Landlord-friendly estates are those that provide landlords with extensive rights and protections. These estates typically have laws and regulations that favor landlords over tenants in disputes. Now, this doesn't mean tenants are left in the cold, but it does mean that as a landlord, you'll have more control and fewer headaches. In landlord-friendly estates, you're likely to find that the eviction process is faster and more efficient. In states where the laws lean towards tenants, evictions can be a lengthy and costly process. But in a landlord-friendly state, the process is streamlined, saving you both time and money. Not only that, but landlord-friendly states often have less stringent property condition requirements. This means you won't have to worry about meeting excessive regulations or passing rigorous inspections. Yes, your property should be safe and habitable, but you won't be held to unreasonable standards. But there's more. In these states, you'll also find that rent control laws are generally more relaxed or non-existent. This gives you the freedom to set rental prices that reflect the value of your property and the current market conditions. With fewer restrictions, you can maximize your rental income and make your investment more profitable. And let's not forget about security deposits. In landlord-friendly states, you'll usually have more freedom in setting and withholding security deposits. This can provide you with an additional layer of financial protection. So, as a first-time investor, where should you look? States like Texas, Indiana, and Arizona are often cited as being landlord-friendly. But remember, laws can change. So it's crucial to conduct your own research or consult with a real estate professional in the area. And there you have it. Investing in landlord-friendly states can provide you with more control, fewer headaches, and potentially higher profits. But remember, every investment comes with its own set of risks and rewards. So do your homework, consider your options, and make the decision that's right for you. So investing in landlord-friendly states can provide you with more rights and protections as a property owner. Now that we've covered our 3 tips, let's summarize them. We began our discussion with the first tip: buying a good deal. This isn't just about finding a property within your budget, it's about understanding the value of the property and the potential for future gains. Remember, every property you consider is more than just bricks and mortar, it's an investment opportunity. So you need to negotiate a good price, but also look for properties that offer a value-add opportunity. These are properties that, with a bit of investment and elbow grease, can significantly increase in value. Our second tip focused on the importance of location. All the savvy investors know it, and now so do you. When it comes to property investment, location is key. A good location means good appreciation and good rent numbers. It's not just about the here and now, it's about the future potential of the area. Look for locations with strong growth indicators, like new infrastructure, growing employment opportunities, and increasing population. These factors can lead to higher demand for rental properties and, in turn, higher rental income and property value. Lastly, we touched on the importance of investing in landlord-friendly states. Not all states are created equal when it comes to landlord rights. Some states lean more towards the tenant, making it harder for landlords to evict non-paying tenants or increase rents. On the other hand, landlord-friendly states have laws that protect and favor landlords, making it easier to manage your rental property and ensure a steady stream of income. But remember, these 3 tips are just the beginning. They are the foundation upon which you can build your property investment journey. As you delve deeper into the world of property investment, you'll discover more strategies and tips to help you succeed. But for now, these 3 tips will give you a solid start. As a first-time investor, it's natural to feel a bit overwhelmed, but don't let that stop you. Property investment is a journey, and like any journey, it starts with a single step. And that step is gaining the knowledge you need to make informed decisions. You've already taken that step by learning these 3 tips, so don't just sit on this knowledge. Put it into action. Start looking for properties that offer a good deal. Consider the location and the potential for future growth. Look into the laws of the state where you're considering investing. And most importantly, believe in your ability to make a successful investment. Remember, every successful investor was once a beginner. They made mistakes, learned from them, and kept moving forward. And you can do the same. With persistence, patience, and the right knowledge, you can make your first investment a successful one. With these 3 tips in mind, you're well on your way to making a successful first-time investment in rental property. Good luck, mates.